Hey everybody, what's going on? It is James here with Three Peaks Trading, and in this video, we're going to continue talking about trading. We're going to talk about risk management, how to set up a trade, and again, we're going to talk a little bit more about that concept of R. So when I talked about R in the last video, there was a few questions, and there was a question that came up that always comes up. Somebody asked, is this for leverage traders? In the crypto world, which is where most people got introduced to leverage is used as a gambling mechanic where people are YOLO trading and doing really, really risky stuff. Every once in a while, somebody will hit it big, turn a few $100 into, hundreds of thousands or even millions of dollars. And you hear those stories. And so people are like, oh, leverage is a good thing. But you don't hear about the 99,999 other people who lost all their money because they were playing with fire. All leverage does is allow you to take trades without having to cover the whole amount. But it doesn't mean you should be taking trades that you can't cover. It doesn't mean you should be taking trades with risk that you can't afford to take. And so I could do a whole video on leverage, but I'm just going to leave it there. I'll probably do one in the future. Just realize leverage doesn't change the position size that you should take. Your position size, if you are a professional trader, is always based on your account size. If you have a $1,000 account, your position sizes are based on that $1,000 account. And more specifically, they're based on your risk tolerance. So you take account size times risk tolerance. A general rule of thumb on risk tolerance is 1 to 3%. So let's say, for example, you've got a $1,000 account, you're starting out, your risk tolerance is maybe 1%. So you're risking 1,000 times 1% equals $10 per trade. Doesn't mean you take a $10 trade. It means that you take a $10 risk. That means if your stop loss is $10, you're going to have one share of that stock. Or if it's cryptocurrency and your stop loss is $10, you're going to have one coin or one token. If your stop loss is $1, you're going to have 10 shares of that stock, because if it goes against you, 10 times 1 is $10. If you have a $10 risk on cryptocurrency, with $1 stop loss, you're going to have 10 tokens, because if it goes against you $1 and you have 10 tokens, you're going to lose $10, so on and so forth. Leverage has nothing to do with it at all. The only thing leverage does is there may be a time where your stop loss is small and you're trying to take, for example, let's say you're trying to take a $10 risk, but your stop loss is 10 cents. Then you're going to need 100 shares of that stock or 100 coins, whatever the case may be. Let's say 100 shares of that stock. So 10 cents risk times 100 shares, that's $10. But maybe that stock is $20 per share. Well, 100 shares times $20 equals $2,000. You only have 1,000. That's when you would use leverage. You might need to use 2x leverage so that you could take your $2,000 position that still had $10 worth of risk. Okay. So let's jump into this actual chart. We're going to talk about this and how this works today. And I'm going to show you, because yesterday I focused on larger time frames. We looked at a BNB chart where BNB had moved up, roughly double. And I want to show you how R applies on a smaller time frame. So right now I'm on a 5-minute chart. This happens to be Lyft. I'm on a Lyft chart because they broke the law, in my opinion. They released a false earnings report the other day. Quote unquote, it was a typo. Caused their stock to surge 70% overnight, and then they corrected it and it dumped back down. But what's interesting is it's got eyeballs on the stock now, and it's actually seems to have started a rally. So anyway, that's why I'm looking at it. But if we take a look at this chart, I'm not going to go into all the trading mechanics and all the setups and things like that. We're just going to, look at this, and I'm going to tell you that there is a legitimate reason that somebody might have been wanting to take a trade on today's open. Okay, we'll leave it at that. So overnight, we ranged. Market opens today, opens right here. Now, a lot of people are going to say, I can't take that trade. I'm inside of this range. It hasn't broke out yet. Well, guess what? It's either going to break out or it's not. We know that. We know it's either going to break out or it's not. So there's a 50-50 chance this is breaking out. So if I see something like this, again, I'm not going to go into all the details. There's some other reasoning behind it, but I wouldn't feel bad about taking a long position on the open of this market. So if I take a long position here, and I put a stop loss at the bottom of this range, which essentially could be back here for some people. Some people say I'm just going to go ahead and go back to the last pivot before yesterday's close. We'll use yesterday's close to be a little bit more conservative. Gives us a 45-cent stop loss. Okay, 45 cents. Now, if a person is still in this trade right now, they're up 5.89 R. Okay, If you guys remember that BNB example yesterday, I don't remember the exact R, but it was 5 point something. It's very close to the same thing. So again, a person, let's say a person is an investor. They bought Lyft here at $16.59. Let's say they put $1,000 in, invested. Right now, they'd be up 15.97%. So they would be up about 15.9. So about 159 bucks profit is where they'd be right now, unrealized profit. Okay. So again, if you invest $1,000 with no stop loss, you're risking $1,000. If I'm a trader and I'm risking $1,000, that means I'm risking 1 R. Okay. 1 R is what I'm risking, which equals $1,000. So see how this says 5.89? Drop down a little bit. 5.82. That means I'm up 5.82 R if I'm in this trade. 5.82 times 1,000. Right now, this trade is up $5,892. Okay, that's what it's up right now. Almost 6,000 bucks, and that is from 8:30 Central Time today until noon or 11:59 Central Time right now today. That's where that trade would be at. Okay, so the investor is up 159 bucks. The trader's up almost $6,000. Now, this is also a great example of how you might need to take some leverage here. If you're trading with $1,000 risk, we're going to assume you have a $100,000 account because, again, $1,000 is 1% of that. So if you have a $100,000 account, it's a 45-cent stop loss. How many shares would we need to take to get $1,000 risk? Well, let's look. So if we got 1,000 bucks, we need to take divided by 45-cent stop loss. We need, I'll go ahead and do the math on my phone so that I don't have to stop the video. So 1,000 bucks divided by 45 cents. We need 2,222 shares. 2,222 shares. Those shares were going to cost us $16.59 a piece. So in this case, it would only be about $36,000 worth of stock. We'd have no problem covering that with our $100,000 account balance. Now, had it been maybe $300,000 worth of stock we needed to buy, then we would have used leverage to do that. All right, but that's how that works. It's dead simple. This will probably be the last video I do on R for a while because you either get it or you don't. If you don't get it, I don't know, maybe ask questions and I can try to kind of explain it better. But you have to understand R before you can be a professional trader. If not, you're just kind of, wandering around in the dark. But again, you saw an example yesterday of how in a larger time frame, over the course of many months, an investor could have doubled their money roughly, whereas a trader could have made, 5 or 6x. Now you're seeing an example on a day trade, how an investor could have made 150 bucks. Again, investors usually hold long term, but in this period, they would have been up about 159 bucks, whereas the trader would be up nearly 6,000 bucks. If you're watching this video in the Facebook group, make sure you give it a thumbs up on Facebook. Make sure you leave me a comment on Facebook. That helps with the algorithms. If you're watching the video over on YouTube, make sure you give it a thumbs up there as well, and make sure to leave me a comment. I have decided that I'm going to give this one more go this year. I used to do videos every day. Then I had, of course, stopped for a long time, doing them about once a month. I'm going to see how it goes this year. I'm going to do videos on a regular basis for a little while. If people are interacting, if they're doing the thumbs up, if they're doing the commenting, if they're doing the things that I asked them to do, then I'll probably continue doing it. If I don't get a bunch of interaction, I've made the decision that this is the last year I'm doing it, and I'm just going to focus on my own trading and the other 2 businesses that I own. So make sure you're participating. Don't leave it up to other people. It takes nothing but a second to click those buttons and to leave a comment. It's not asking for a lot. All right, with that being said, this is James with 3 Peaks Trading, reminding everyone that I am just some guy sitting in a spare bedroom, which means that nothing in this video is financial advice. You should always go out and do your own due diligence and seek out professional financial advice from a licensed financial advisor for making any type of investment in cryptocurrency, the stock market, precious metals, Forex, or any other tradable asset. And last but not least, everyone, please remember, use proper risk management and trade safe.